Dear ladies and gentlemen, it's a great pleasure to welcome all of you to our Team F video presentation. We issue a hold recommendation for Yandex with a target price of $61.13 per share and 9.2% downside from the current price level as of January 18th. We cannot approve this sell recommendation due to high prospects for new directions of Yandex activity. For the last 20 years, Yandex has been holding a leading position in Russian market related to the search engine, and new digital technologies create challenges for this leadership that Yandex successfully overcomes. Yandex path is somewhat similar to the histories of Google and Baidu, while the peculiarities of the domestic market cause unique differences. Among national competitors, for example, Sberbank and Mail.ru Group are trying to benefit from the same ecosystem effects like Yandex, but among them, Yandex remains the technology leader. Today, as one of the fastest growing companies in the world, Yandex works on a diversified ecosystem. Yandex senior business generating profit includes search and portal, taxi and food tech. Mid-level business already showing successful results is represented by media services, e-commerce, classifieds. Junior perspective business includes bets and experiments.
Yandex takes a dominant position in the digital advertising market. Leadership and policy to simplify the consumer experience, make it an attractive advertising platform, and contribute to keeping high marginality. We expect Yandex operating income margin from search and portal segment will increase up to 45% by 2025. We also anticipate that the digital advertising market, already occupying more than half of the total ad market, will be saturated in the foreseeable future with a 7% growth in the entire advertising market, an increase of Yandex share in the digital market. We expect a reduction in the search and portal 5E revenue CAGR to 12%. Due to the inflows generated by advertising, Yandex successfully launched and developed other ecosystem products. We highlight taxi as a mature business and e-commerce as the most expected direction. The rapid evolution of Yandex new businesses strengthens the sustainability of its ecosystem and eventually ensures risk diversification. We believe that it was the main factor of decreasing Yandex market beta in the last 2 years. We get that beta can continue decreasing due to large new businesses. Overall, from our industry analysis, we conclude that the reduction in the search and portal revenue growth rate will lead to a forecast of Yandex 5E revenue CAGR not higher than 18%. Our research showed that missing the fact of saturation of digital advertising market and extrapolating its historical growth wrongly increases the Yandex fair value up to $85. This is the first reason why we believe that the market overestimates Yandex.
We highlighted the following main findings of our ESG analysis. First, the characteristics of the board of directors and the management team are in line with the best practices. Second, the Public Interest Foundation minimizes the risk of government interference. Third, 87% of the shares belong to public shareholders, which excludes a conflict of interest with managers. Fourth, Yandex has an average ESG ranking according to the international agencies.
We begin our valuation analysis with research about reasons for strong Yandex shares growth in 2020. Firstly, we found out that Yandex 5-year monthly market beta significantly fell since 2018, probably due to diversification of business risks. It led to cost of equity reduction from 15% to 10.5% and should have caused the growth for Yandex stock price at least on 90%, as the duration of its expected free cash flows is more than 20 years. Secondly, we believe that Yandex inclusion in the MSCI Russia index and news about possible Tinkoff takeover were important factors for its stock price growth during the past year. Finally, using our relative valuation model, we see that Yandex multiplicators have significantly increased over the past 2 years. We consider differences in fundamentals among companies with a regression approach based on 20-year panel data. According to this model, today, Yandex is estimated exactly by the regression, while in previous years, it was solidly undervalued.
These arguments support the view that changes in conditions of financial markets could be the main reason for Yandex stock price growth in 2020. The opposite view is associated with the possible arrival of any fundamental information related to financial statements. To confirm or deny this opposite view, let's pay close attention to financial analysis. In 2020, from the financial statements, we have seen two new drivers for Yandex revenue growth. First, it is a 250% unexpected growth of Yandex food tech segment due to pandemic, and second, the inclusion of e-commerce segment due to buyback of Yandex Market from Sberbank. Based on our valuation analysis, these two drivers shift forecast and increase the Yandex ruble fair value by 14%. Also, Yandex showed no profitability growth in 2020. Normalized EBITDA margin fell to 16% from 22% a year earlier, which fits into a general trend of declining profitability over the past 5 years, mainly due to launch of new businesses. Similarly, there were no significant changes which might affect forecasts regarding operating cash flow, CapEx, and other investing cash flows. Therefore, we still expect that free cash flow to firm will increase from 16 to 19% of revenue in next 5 years. The main change in assets and liabilities structure is caused by the issuance of convertible bonds in the first quarter of 2020. Also, Yandex has assets that enlarge the stock price by $9.72, and we consider it as an opportunity to acquire new companies.
As a result, our analysis of financial statements did not confirm the view that Yandex stock's price in 2020 increased as a result of arrival of any fundamental information. Therefore, we conclude that changes in conditions of financial markets, including possible investors' overreaction, takes place in the last year. This conclusion confronts market efficiency hypothesis and, according to the behavioral finance approach, could be expressed through the mean reversion model of stock prices. To prove it, we used a variance ratio test, a standard econometric approach for testing mean reversion against random walk, and found that firm-level factors of Yandex stock returns strongly confirm the mean reversion model. This is the additional argument to support the view that there were no firm-level fundamental news last year to cause such strong price growth, and it is the second reason to believe that market overvaluates Yandex now. This conclusion is also supported by our DCF model. Based on our industry forecasts, we decompose the fair value of Yandex into the value of individual parts of its businesses, and received the digital advertising business makes up about 60% of Yandex value. But the most promising segments, including e-commerce, are forming only 30% of Yandex fair value due to negative profitability in the next 5 years, while long horizon profitable prospects fully accounted in current prices due to the high Yandex cost of equity. This explains why investors should not pay too much attention to the information about the development of new directions of Yandex business. And it is a third reason to believe that the market overvaluates Yandex now. Finally, we get 12 months target price of $64 with interval from $51 up to $80. We also include in our model the option to exploit follow-on opportunities, but according to our estimates, it adds only $1.5 to Yandex share price, as main opportunities starts to add any value only from 2030 with a growth of Russian self-driving cars market.
However, our proposition is subject to the 4 most important risks. First, currency risk affects both Yandex debt, servicing costs, and profits. Second, economic growth risk strongly impacts search and portal business. Third, possible risks can be linked with outflows of foreign capital due to political sanctions. Fourth, government interference risk can lead to shareholders' rights violation.
Finally, from our research, we conclude that market overvaluates Yandex due to following 3 reasons. First, investors are missing the fact of the saturation of the digital advertising market that wrongly increases the Yandex fair value up to $85. Second, Yandex stock returns follow the mean reversion model, which predict a correction in stock prices in 2021 after a strong growth last year. Finally, Yandex's most promising business lines are currently unprofitable and make up a small share of Yandex fair value due to high cost of equity. Even though market overvaluates Yandex and we expect stock price correction this year, we cannot approve this sell recommendation because Yandex remains a Russian technology leader with broad ecosystem prospects. Therefore, we recommend hold. And thank you for your attention.